often assume that to be a successful investor, you need to be an expert in economics. In fact, far more useful is a knowledge of history, particularly the history of the financial markets. Professor Russell Napier runs a financial history library in Edinburgh called the Library of Mistakes. For him, there's one standout lesson that financial history teaches us.
People sometimes ask me, what is the #1 book to read on finance? And it's a book by Elroy Dimson, Marsh and Staunton, called Triumph of the Optimists. Now, all that book is a rather expensive book. We have a copy here for anybody who wants to come and read it. Is a roadmap of the historical returns from equities, bonds and cash over a very prolonged period of time. And it allows you to work out what has been a reasonable return, an unreasonable return. In other words, what you can expect from a market and what you can't expect from a market. And I think the simple answer from that, all of that data, is that you do need to diversify as a layman, and not just between equity markets, but between asset classes.
That book, Triumph of the Optimists, charts financial returns over the entire 20th century. No one invests for quite that long, but new investors today could be investing for at least 50 years. You need to take a long-term view.
All investors need to know is what the long term is. That's it. That's all they need to know. Once they know what the long term is, then they can adjust accordingly. The long term, I think, is 18 years. I think it's on the whole for US equities, there's never been a period of 18 years where you didn't get a positive real return with dividends reinvested. The problem is, I think that most people, when you say long term, think 4 or 5. Some of them might even stretch it to 8 or 9, but there have been these very prolonged periods when equities have not delivered you positive real returns.
All investing involves a degree of risk, but if you diversify and you take a long-term view, you can afford to invest with confidence.